Hello and welcome to The Agenda. I'm Stephen Cole. It's already completely changed the world of financial services for both business and customers. So this week, we're going to consider the future for FinTech. An investment explosion. We'll find out why 1 in every 5 venture capital dollars is going towards financial technology apps. Plus, how China is leading the way to a cash-free future. And how financial technology is making the world a much better place for some of the most disadvantaged people on the planet. FinTech has already changed the lives of millions of people and the way banks operate across the globe. It's also expected to reach a market value of approximately $324 billion by 2026. But what is FinTech, and why is everyone talking about it? Because many in the big monetary hubs believe it's our financial future. FinTech is short for financial technology, so if you've ever paid for something using your phone or by transferring money on an app, then you're already part of the multi-billion-dollar industry. The term FinTech can refer to products, technologies, and business models that are transforming the financial services industry. Things like cashless payments, cryptocurrency, and crowdfunding sites all fall under the umbrella of FinTech. COVID-19 has been a catalyst for many FinTech companies, with an increasing demand from both consumers and businesses who went cashless during the pandemic. In the second quarter of 2021 alone, FinTech attracted $34 billion in venture capital funding. Since 2018, the value of FinTech as part of the banking industry has grown by 6% and is now worth over $1 trillion. And the FinTech landscape continues to change. Just 5 years ago, it centered on the US and China. Today, Europe is catching up. Klarna, the Swedish buy now, pay later startup, is valued at $46 billion. And the banking and payments app Revolut has become the most valuable British fintech firm on record. It's recently been revalued at $33 billion, and that's 6 times higher than last year, when it was valued at $5.5 billion. Here with me now is Janine Hirt, and Janine is CEO of Innovate Finance, and that's FinTech's industry body here in the United Kingdom. Janine, can you sum up in a few paragraphs what FinTech is?
Oh, it's a good question. FinTech, or financial technology, is ultimately looking at technology or innovation to transform financial services and make it more inclusive, make it more democratic, make it more effective, and also looking at areas where we can, for example, reduce cost and make the process more efficient as well. So it is ultimately bringing in technology and innovation to make financial services work better and work better for customers and clients.
So it's combining innovation and technology, pointing towards finance.
It is. I mean, it's really, I think, ultimately merging financial services or bringing financial services together with technology and advancements to look at how we can make financial services work better for people, for the customers, but also make the banks and the incumbents ultimately more efficient and more effective more broadly.
So in your campaign to transform financial services, are you encountering much opposition?
It's a really interesting question. I think COVID has had quite a significant impact on FinTech more broadly, because there's been a renewed understanding of how important technology is to all areas of our lives, but particularly when it comes to financial services. So we've seen, for example, here in the UK, through the C-bills and the B-bills loans, the key role that alternative lenders have played in getting some of these loans distributed out to the SMEs and ultimately supporting SMEs and individuals throughout the entire experience and throughout the entire pandemic. So I believe there's a renewed focus on the role that technology and FinTech plays in terms of transforming financial services. The Khalifa Review as well, which was very welcomed and was commissioned by government, by HMT specifically, shows that there is a very significant appetite and an understanding at the highest levels of government of how important FinTech is and how important the transformation of financial services is to make it more democratic.
And also, I suppose you're trying to promote financial inclusion.
We are, because ultimately, many of these technologies create the opportunity for more individuals to have access to these financial products, and also for these individuals to have access to financial products at the right times in their lives. So for many fintechs, they are focused on data, on understanding data, on utilizing data to be able to provide a picture of an SME or of an individual to enable them to access these products at the relevant points in their lifetime.
Would you say fintech makes us perhaps more resilient or is a better protection against financial crashes?
Well, I think the spirit of fintech is really important to focus on when we think about financial services more broadly, because many will point to the 2007, the 2008 crisis as being the birth of a large slew of fintechs being developed at that time, because there was a real frustration with the incumbents, with the financial services as it was back then, about not putting the customer at the center. So you suddenly had entrepreneurs developing, creating new models, creating new business models, creating new companies that put that customer back at the center of the proposition. And they were able to create bespoke engagement with the client, with the consumer. And for that reason, fintech ultimately isn't necessarily protecting against crash, but what it is doing is ensuring that financial services puts the customer back at the center more broadly. So even in the face of the pandemic, it was really fintechs that were able to come to the support of the wider ecosystem and for the wider society as well. And there was a time in March of April of last year where suddenly we were forced to go digital. The big banks had a real struggle in terms of moving their products online on a quick manner with literally almost no warning. And fintechs were able to come in and fill that gap and provide some of these services either directly to the consumer immediately, or they're able to work with the incumbent financial institutions to facilitate them giving that same access to the consumer on a digital basis.
And you mentioned COVID. How much has the pandemic, you think, accelerated the fintech boom? And how have your members been affected during the pandemic?
So the pandemic was a very difficult time for everyone. Particularly at the beginning, there was really no assurance as to where the pandemic would move to, as to what it would mean for broader financial services. But what it did do is underline the importance of technology, and especially when it comes to financial services. And it also underlined how important it is for financial services providers to be agile, to be flexible, to be able to pivot. And that's something that fintechs, by their very nature, are potentially stronger at than many of the incumbent financial institutions. And so in that way, there was a real focus shown on the absolutely critical role that fintechs could play in helping us all to navigate through to the end of the crisis.
So where are you going next with fintech?
Well, we're at a really exciting time. I think the UK in particular is a global leader when it comes to fintech. We've just come out with numbers showcasing that we've had nearly 5.7 billion US dollars invested into the UK fintech ecosystem just in the first half of this year, which is groundbreaking and has broken all of our past records and is more than all of 2020 combined in terms of investment. So we're looking at a really positive future. In terms of regulation, we are at an inflection point because in a post-COVID environment, it's more important than ever before that we protect the consumer, but we also want to protect the consumer and enable some of these innovations to thrive, because it is the consumer that's benefiting from many of these new players, these new entrants, and these new technologies at the end of the day as well. So I think we've got an incredibly exciting future ahead of us. We are looking at new innovations happening in personal savings, in personal financial management, in investment as well, and really across the board.
Janine Hirt, CEO of Innovate Finance, many thanks for joining us here on The Agenda.
Thank you so much, and thank you very much, Stephen, for having me.
For perhaps the strongest example of a shift away from traditional transactions, look no further than China. The country is constantly developing new cashless innovations and is fast becoming one of the world's leaders in fintech, financial technology. To find out how, I'm joined by Richard Turrin, best-selling author of Cashless, China's Digital Currency Revolution. So, Richard, you're a former investment bank trader who spent, 10 years, a decade in Shanghai. You'll have seen firsthand how FinTech is changing the financial landscape. How is FinTech working in China? What changes is it making?
There are two buzzwords that we use in the financial technology world, and they're not complicated. The first one is embedded finance, meaning that you take finance and you take money and you take it and put it wherever you are. In other words, if you're online or you're doing something with one of the apps, that ability to access your funds and move money is there with you. So embedded finance, meaning that your money is always next to you and with you. And the other one that's absolutely critical for China is inclusive finance. That means not leaving anyone out, meaning that people who live in the more remote regions of China are now, through digital banking and through digital technology, included and are able to participate in the financial system. So lots of changes in China, but they come down to two real critical words, and they are embedded finance and inclusive finance.
So China has gone full speed ahead with this, but what about the rest of the world financially? You're in Shanghai, it's a financial hub in China. What about the City of London? What about New York? How are they faring with FinTech?
All of them are doing okay, but frankly, China is years beyond. So let's just think about where China is. China has two wonderful payment platforms called Alipay and WeChat Pay. And they're the first generation of digital payment in China, of course, beyond credit cards or debit cards, which were around before. And now China is moving to the next generation, and that is the central bank digital currency. And it's been working on it for about 7 years. It's a big project, and it will be coming out sometime perhaps next year in 2022. So where is China? Where is everybody else? China's already far beyond most of the world with digital or mobile payment through using the payment platforms WeChat and Alipay. And now it's really leaping ahead with the central bank digital currency, and it's actually inspiring other countries to actually build their own central bank digital currencies. But it's the other countries, which, and I think it's great they're developing digital currencies, but they're going to be far behind China. China started this project 7 years ago and has years of experience with digitizing payment. So probably when you look at the US or Europe, I would say they're actually a decade behind China in digital currency and using digital services, digital financial services.
What about, Richard, what about Chinese banks? Are they proving resilient to the FinTech revolution?
Oh, absolutely. Look, the concept that FinTech will somehow destroy the banking system is an overstatement by many. Look, there is no question that the banks in China were impacted by the success of WeChat and Alipay, the payment platforms. But now with the digital currency, they too will have the ability to make immediate digital payments, and the banks are innovating. So what you see in the China banking system is this tremendous focus on innovation. And it's far in excess of what you would see in their Western counterparts. Now, why is that? Very simple. Banks in China have already been partially disrupted or at least shaken from their slumber. And they are now very active in digital because the digital platforms came along and fundamentally changed financial technology and how we use money in China. So they've had to adapt and they've had to change.
Tell me more about this rush, this haste to digitize our finances. And are there pitfalls or dangers along the way of digitalization?
Look, the People's Bank of China has been researching how to develop a central bank digital currency for 7 years, and they're already now on at least 6 or 8 months worth of trials. And the big worry that they have is not that they can't launch a digital currency. Of course they can. The real issue is, who do you leave behind? If you go digital, do you leave behind the elderly? Do you leave behind poor people who may not be able to buy a smartphone or a device? So the real question is financial inclusion, and how do you make not just a digital currency, but how do you design, and this is what the PBOC has been very good at. The PBOC has designed special smart cards that are small and they have a thumbprint reader, and they're designed for people who don't have a smartphone to be able to use and access digital currency. So going forward and going digital and going into the future is a wonderful thing, but you have to make sure you don't leave people behind. And that takes a lot of thoughtfulness and a lot of time. And the PBOC has really been doing a commendable job with that.
Given, Richard, that China is still developing its digital yuan, is it difficult to know what impact it will have on the position of the dollar? I mean, what would be your financial guess of the impact on the dollar and on currencies elsewhere in the world?
Look, that's a primary question that everybody wants to know. And the answer is the People's Bank of China, and no one in the government in China has ever said, oh, the digital currency is going to overtake the dollar and displace the dollar. What they have said clearly is that they do hope that more people will actually use the digital RMB, potentially in offshore trade, and that China might be able to reduce its dependence on the dollar by a small amount by using the digital RMB. So what's not going to happen, and this is what I see in the newspapers, is that suddenly the digital RMB is going to launch for international use, and suddenly the dollar is supplanted by the digital RMB. That's not going to happen. It's going to be a very long, slow process where importer or trader after trader suddenly decides that when the digital RMB is available in their country, there is an advantage to them using it. There has to be an economic advantage for them to use it. So eventually, I do believe the digital RMB or digital yuan can help China reduce its dependence on dollar.
Richard Turrin, author of Cashless, China's Digital Currency Revolution. Many thanks for joining us here on The Agenda.
Absolutely a pleasure. Thank you for having me.
Still to come here on The Agenda, connecting communities, how FinTech is transforming life for the financially vulnerable.
Covering the world from 4 continents, a new horizon. Teams in Beijing, Washington, D.C., Nairobi, and London, who connect, interact, and inquire to bring you the stories that matter to all. The Link, only on CGTN.
Welcome back to The Agenda. So just why is the financial technology sector such a seemingly attractive investment? And exactly what kind of applications are out there to improve all of our financial futures? To try and answer those questions and more, I'm joined from London by Samuel Manning, the founder and CEO of open banking service Hope Macey, and from Dublin by FinTech consultant Peter Oak. Starting with Peter, what is the current state of play, if you like, of FinTech investment?
What we're seeing is probably now that 1 out of every $5 that is invested by a venture capital firm is going into financial technology applications. If we look at what's happening globally, in the first half of this year, the amount of investment into financial technology, or FinTech as we call it, actually exceeded the entire amount that was invested in 2020. And that trend is also occurring in the UK, and in particular in London, where firms raised $5.5 billion US worth of investment in the first half of this year. We've seen companies like Revolut, which is UK based now, reaching valuations of $33 billion US, 24 billion sterling from a standing start of only a few years
That's
ago.
impressive.
Exactly.
Okay, let's go to Sam Manning, founder and CEO of Hope Macey. Sam, what is Hope Macey and why did you found it?
A few years ago, I joined one of the 8 million people in the UK who are carers, and the care environment in the UK, it struggles immensely with getting financial oversight for the person that you're actually caring for. So at one point, I was caring for both my son and my mother. It was driving me crazy, the difficulty in finding out what their financial situation was. There was scams going on, fraud going on, bills being missed. So luckily, the UK has got a very advanced financial technology scene, as Peter's explained. There is a concept of financial services for good in the UK, and pretty much driven agenda by the UK Financial Conduct Authority. So what I did with a couple of friends who also had problems with family members who they had to look after financially was to reimagine how you would go about looking after someone financially, bearing in mind all the great technology and the investment that's available to UK firms. So 3 years ago, we set up our organisation. It's now a regulated business, and I'm able, with a click of a button, to see what the financial situation of my family are very quickly without them worrying about any interference from me.
Do you think FinTech is changing the economy for good?
What's happened a lot in the UK is the fact is that the banks pretty much had a monopoly on financial services for a very long time, and open banking is in a way deregulated the sector, but in a secure way, which is backed up by the Financial Conduct Authority. So there's been a number of organisations that are looking at better ways of accessing your own money or spending in a different way. So with variety and competition, it has to be all good. So there are lots of new firms accessing, for example, banking for blind people, banking for deaf people, banking for people with autism. All these services are now emerging, and that has to be for the better.
There is a degree of confusion here, certainly at the pace of change in financial technology, isn't it? Are there risks attached to moving ahead so fast and to give people like yourself control over other people's money?
Yeah, I wouldn't say we control someone else's money. That's not the situation. We provide customers the ability to have oversight with someone else's money, but there's safeguards in place to prevent an abuse by a carer. So that was very much designed into the system from the beginning. But I think financial services are changing a lot. There are mobile phone companies that are looking to maybe convert an unpaid bill into a loan, or maybe allow customers to overpay their bill and then link a payment card to their phone account, and that could act as a payment card to buy goods and services. So there's all sorts of different things going on that's going to give people a variety of choice. And like a lot of things, when you have a lot of stuff going on in the economy, you just don't know where things are going to land.
Exactly. Well, let me ask you, Peter, whether this is disrupting markets or the impact on the markets, and is it all these changes, do you think, ultimately good for consumers?
I do think overall, these improvements, these enhancements and the innovation are going to improve the experience of the consumer, which the techies call the CX or the UX, which is the user experience or the customer experience. But mixed in all this are certain types of financial technology that I think consumers and people even like me who might, profess to have somewhat of expertise, need to be really careful of things of like digital currencies and bitcoins and non-fungible tokens, all these words that are being thrown out there. And we've seen lots of regulators clamp down heavily on some of these firms and reminding consumers that actually some of these products, although they're fintech, they're not regulated. So you need to be very careful with your choice, because you might put your money into something where the money's not being safeguarded. There might not be an investors' compensation scheme behind it.
Sam, what do you think the future of financial services looks like?
The future of financial services is incredibly exciting. As a technologist with real life experiences of why we're doing something, it's great. I think the future also requires a lot more work with the regulators. So the key thing is with innovation, especially when it's dealing with people's monies, to make sure that there's strong oversight from the regulator.
Peter, how can fintech support a low-carbon environment?
One of the things that we're very conscious about, central banks and regulators, is ensuring financial stability, market integrity, and consumer protection. The whole area of financial stability is actually a lockstep with a low carbon future. So central banks and regulators are now saying to financial institutions, you have to be very careful about where you invest your money as well. Apparently 6.7 trillion worth of investment is needed every year in terms of infrastructure in developing nations. But what I also caution about is you'll see a lot of people doing what we call greenwashing, and they'll be trying to convince you to invest in financial technology businesses that are there for consumer good and for the climate. But when you pierce the veil, actually, there's very little green economy about that fintech. But these are things we need to look out for. You did ask about the future of fintech and what it's going to look like. I don't think we're ever going to see the banks completely disappear. But I wouldn't be surprised to see banks ending up just simply being custodians of our data and us getting our mortgages from one company, our investment advice from another company, our pension from another company. So banks will still be there because they're still very important. And until we don't have a central bank, which is highly unlikely, we'll always have banks.
Peter Oakes and Sam Manning, thank you both very much for joining us on The Agenda.
Thank you.
Thank you very much, Stephen.
Something astonishing is happening in fintech. Much more money is pouring into it than usual. In the second quarter of this year alone, it attracted more than $34 billion in venture capital funding, and that's a record amount. And it means now that 1 in every $5 invested by venture capital this year has gone into fintech. So, fintechs are inexorably gaining critical mass. Their value has risen to more than $1 trillion, and that's equivalent to 10% of the value of the global banking and payments industry. This blizzard of activity reflects demand from investors as they hunt for more juicy returns and as the digital surge in finance takes off. But it also reveals something more profound. Once the new boy is on the block, the insurgence of finance, fintech firms are becoming part of the establishment. The location of activity has changed too. 5 years ago, the fintech story centered on America and China. Today, Europe is catching up. At the same time, central banks have moved from being the aristocrats of finance to its laborers. Over 50 monetary authorities representing the bulk of global GDP are currently exploring digital currencies. Even the Bahamas has issued digital money. China has rolled out its e-yuan pilot to over 500,000 people. The EU wants a virtual euro by 2025. Britain has just launched a task force. And America, the world's financial hegemon, is building a hypothetical e-dollar. In the world of banking and money, fintech is now the future. Don't forget you can watch everything from past Agenda episodes and find additional exclusive content on our website, cgtn.com/Europe, or on our YouTube channel. And of course, you can follow us on Twitter, Facebook, Instagram, @CGTN Europe. Coming up on a future Agenda, we'll be finding out how much it's going to cost to save the planet. And we'll be asking who will be footing the bill. But for now, from me, Stephen Cole, and all the Agenda team here in London, it's goodbye.